All right, guys, we can get started. Good morning, happy Monday. If you can, I'm going to share my screen really quick. And we're going to go over a little brief market outlook, a couple top ideas that I'm looking at. And then if you have any ideas that you would like us to discuss in the chat in here, just post any of your top ideas and we'll go over them shortly after. All right, so kicking off again, we'll start off with the SPY. We're in this new range here, 420 being, the major pivot out, 480 being, the all-time high air resistance. But for now, 460 seems to be kind of this newer range that we're in. And this is where it could be a little bit tough trying to initiate positions kind of up here, broadly speaking, when the risk reward, buying up through 460 to 480, it's a 20-point move higher, but the realistic downside is, you have about 40 points of room that the market could easily pull back. And this is where we want to wait for those, third day down, it starts to pivot and then look for those kind of buys on the way back up. So again, for sectors we want to avoid in the short term, energy has been very extended in the short term. Again, long term, it's more likely going to continue in this breakout stage that it's been in for the past year. But in the short term, it's just very extended. That it's hard to initiate positions in the energy sector. If you're already in them, it's great, hold those winners. But if you're trying to buy energy in this upper end of the range, given what it's done in the past few weeks, it's going to be pretty tough. On the flip side, we have the telecom sector that's pretty much still in this breakdown stage. This is one we want to avoid for the opposite reason that it's just heading lower with lower highs and lower lows. But the Verizons, the T-Mobiles, AT&Ts, those are the names we definitely want to avoid. And then a few sectors and markets that are kind of basing out, or we can look for those entries to buy back up. We can see, in the small caps, we had this breakdown. It kind of went its measured move of this little, bear flag that was forming. And now this new base can start to form here where we can look to buy up through this 204 versus this 180. But this is where, if we're buying this 204 area, it's not like this next attempt. We want to give it some time and really see if we can kind of find these buys, kind of close to the support where as it comes in, we're buying on the way back up versus having to be perfect and buying those resistance breakouts. Same thing with consumer discretionary, especially with Amazon not getting smoked on earnings. This sector should start to kind of wake up a little bit. Again, Amazon's going to be very heavily weighted in this sector. So what it does is going to really dictate broadly how this sector is going to move. And the fact that they kind of gapped up on earnings, we're probably not going to see that continuous pull in that name. So this sector might be starting to set back up. And we did see this double bottom forming, which is, definitely a bullish sign to see as the name's kind of pulling into its new area of lows. Lastly, sector-wise, again, financials have still been pretty strong. One of the top ideas for me this week is a financial that's been flagging. So again, tough to really buy it in here, but the financial sector has been strong. It's still in this pretty wide flag that's been forming. So just one to kind of keep an eye on. Onto a few individual names. This box, still continuously flagging under this 27 area, even with the market pulling in the last few weeks. It really hasn't done much other than really shaking out that 25 area. So still very strong. Didn't really break. It's still putting in higher pivot lows. So all good signs in a name like this that we can venture set and move up through 27, which looks pretty good. This X-ray, a little sneaky buyback here up through 54 versus this 51 area. Earnings are at the end of the month, so we still have a little bit of time for a little trade up through 54, for maybe a move into kind of the 200-day. PAYC is another name just waiting until after earnings. Been pretty beaten down, but as it came into its prior low, it's held this $300 area. So maybe the worst is already happened in this name. So if it does have some good news on earnings, we'll look for potential up through this 340 versus that 300 area. Win has been basing out for the last few months, and we can see this sort of pattern setting up with this base since November. Same thing, earnings are pretty close, a couple of days. So if we can see a move up through 90 after earnings, could be a little trade there. This Morgan Stanley, this is again going off the financial names, probably one of the strongest financial stocks that at least I've seen out there. Again, maybe a little tough just to blindly buy 105 right now, But if this name can kind of pull in, still kind of hold up in this range, in a few weeks or a month down the road, this 105 looks pretty good. And then we have these last two, this TSM through this 127, 128 area, just a level that it has broken in the past. We can see this nice base that's been forming, giving us kind of defined outs. And lastly is CMS, utility name, very boring name, very low beta, but we can see, this 66 area to 68 has been, significant resistance for quite some time. And we can just see that these, we can see these higher pivot lows continue to form. So you can limit your risk as, time, goes on before that setup's ready. And lastly, I know a lot of the guys have been in Snap with myself, more so on M1. So again, definitely good to see this, the profitable quarter and this thing gapping up percentage-wise very significantly, but chart-wise still, bottom right. It's not like you want to be taking profits in this name given this move. If you're using it, trading it on M1, at least for myself personally, it's still holding it and still not really thinking of taking profits until it at least gets back to this retest to take profits up in this area. When it's going to probably still need another quarter or two to kind of still inch its way higher. And in the short term, it can still easily fade this move and come back into this $20 range and start to continue to base out before it's going to just make this drastic run back to highs, which is what most are probably hoping for, again, myself included, but that's probably not going to be a realistic outcome. So again, those are the names I want to go over. Kevin, if you have any couple ideas that you want to discuss, we can definitely go over those now, and then we'll go into Chris's ideas, and then anyone after that wants to jump in, just drop them in the chat.
Actually, I posted an alpha chat as TSM, that's or TSN, is it TSM? Hold on. Yeah, TSN, Tyson Foods. If you zoom out to a weekly chart, you'll see this is gapping up on earnings right to this like all-time high level. Mm-hmm. Maybe not something that I'm going to buy today, but I'm pretty interested in keeping an eye on this one, looking for like an earnings flag to form sometime this week, and then buy through that. I really like this Google as well, for kind of like a retracement back higher. If you look at the daily chart, obviously had really strong earnings last week, some controlled selling over the last 2-3 days with lower volume every day, finding some support at the 50 MA, and just kind of, I'd like to see this base out here, but it could also just V bottom right back to highs. So I'm keeping a close eye on that one. And then there's just a couple that are, in the shakedown, shake out a bunch of really good ones for this week. I really like this Bros through that 59.60 area. This flag that's forming, if it could tighten up a little bit more, that'd be great, because it is a little bit on the cheaper end. So if you have a stop under that pivot, that's like almost 10% risk. So I'd like to see that tighten up a little bit more. Yeah, that's about it. I see that Kusha has a few ideas here.
Yeah.
First one being Bkng 2500.
Yeah, this looks great. This kind of looks a little almost similar to having like your TSN again. Yours is like an earnings kind of through those all-time highs, but same thing. It's it's a significant level. Through 2500, I would all day long be much more inclined looking to buy this name and buying it through 2500 versus 22 than buying like a beaten down stock near lows that you're buying it say at 25 versus 23. It's going to be the same percentage risk, but this buy has much more probability of that move higher.
Mm-hmm. Something I noticed on this one, and I kind of like also, is like the fact that it had that push to 2700. It kind of gives you a good representation of like where you're going to take profits, and that's kind of the benefit versus buying a blue sky breakout. Whereas like when that's breaking out and it's going to uncharted territories, you don't really know how far it can go. But at least here, when it has a really nice level, but it still had that one moment where it went higher, you kind of you don't know 100%, but you have a better idea that it could. That's a good spot to take some profits. So that's a really nice chart.
And even with like, when you mentioned like the blue sky breakout, it's like, even to look at like MS, for example, through 105, we can say, okay, this thing's going to probably go in the short term.
Like $13. Yeah.
Yeah. Like we'll call it 115 for just simple math. Mm-hmm. And everyone who's now been buying Morgan, since last year, and anyone who can read a chart is also kind of thinking the same thing. Yeah. But now when you start to get into names like this Bkng, everyone was thinking that going into that breakout through that 2550, And you have a little bit of this crowd starting to take profits into this move. Not a lot of people, but you're starting to get a few of those people that were in this thing taking profits in that move, like you said, and now they're starting to leave the party. And just like we've done this hundreds of times, we focus on the blue sky breakout, we take that 3 or 4 day move, we make some money in it, and then we move on with our life and we find the next blue sky breakout. And then we come back 6 months later and the thing is 50% higher. And we're like, what, like, how do we forget that? So sometimes when we see that, like you mentioned, that breakout and it sets back up, that second time, yes, we definitely want to be taking some profits into that area because will be resistance, but then there could be that next leg when more eyes aren't really focusing on it and it can get that little drift higher. And, sometimes those sneaky buybacks that second or third time through it after it's broken can get those bigger moves that, a lot of times we just lose the patience with and kind of forget about.
Yeah.
Definitely agree with what you're saying.
Next one, VSCO 58. Victoria's Secret.
Yeah, it's great.
Yeah, that's a nice chart.
58, yeah, it's really good.
We got PLD 158.
PLD 158. I definitely see what he's looking at. I just think from of the other ones, this VSCO, the Bkng, I feel like these are just going to be much easier trades. This is just much more defined. 1, 2, 3, 4, 5. It's like the 6th time through this area where with the was it PLD? It's like it's still, if this was setting up a few more times, definitely like it more, but I think you have probably better upside with like the VSCO example than this PLDG.
Yeah, I'd almost be looking to buy this off of support when it gets back down there. Like it looks like it kind of tried to break that 158 last week. It couldn't get over it. And like I could almost see this pulling back to maybe 150 or even 148 and then buying on the way up and then selling into resistance. I think that would be, I would look to do that before I would look to buy through 158. But yeah.
And this is like that example where it's like, if you're in this thing, it's like the goal here is really just selling that retest. That's going to be where resistance is going to get, really hold. And like, that's where you want it. If we're going to be buying, close in your support and down into here, we want to be taking the profits into that move when it's retesting those prior highs.
Yeah. Next one, we got STX through 110.
I think you just wait for that 116 in time, then trying to, you get in here too soon for a couple bucks, and I would just wait.
Especially with that earnings day move, and then the next day, like just those 2 days, you're kind of in this $16 range, and right now it's sitting in the middle of that range. So you're kind of in the middle of nowhere. I'd rather see this either test support or consolidate at resistance and then buy through that.
Yeah.
Next one, we got SF 79.
All right. So looking at the finance names, we talked earlier how that they've been pretty strong, but this is kind of similar with energy, where it's like this name individually has just gone so far off of support that it's very hard to what was the other example with that? The retest. It was it STX? What the hell was it? PLD. So PLD, we talked about, again, here's all-time high, and the goal is to sell the retest. Now we're looking at this SF. This is this was the all-time high. This is the retest. And this is like when we want to be taking those profits. And this very sharp move off of support, where very hard to initiate a position here when, yes, it may tickle 79 a little bit to trap a few people that are really chasing it here, but you're not going to get that, or you shouldn't really be expecting, a continuation of this move. Like if it can pull back in and set back up, maybe pulls it back to 70 and then it gets back up there, definitely that third or fourth time, probably much more higher likely. But right now, this is probably going to be a pass.
Yeah. Next one, CF 76.
Okay. It's the same thing again. It's like they're back, this is kind of that retest area. And yes, it may push a little bit higher, but we've gone over retest extensively. And these are harder buys. If this can kind of set back a little bit more and take it, because again, you're risking $3 here. So if you're risking $3, do we really think this is going to go another $15 when it's $12 off support, we're really asking for a lot for that to.
Yeah, and if you zoom out, you see it's kind of just been in this ascending channel. And again, these you have to buy off support because it'll just kind of tick. It'll go a little bit higher than those previous highs, and then it sells off. And that's what it's been doing for over a year. So, when you see a pattern like that, expect the pattern to continue. You don't want to.
This is like very, very similar to like energy right now. We looked at it's like, this is that channel you're talking about. And it's like, right now up here, this is when everything looks perfect. Anything you look at, it's like, it's gone up so much. This is the best time to get in. And when it looks that perfect, it's like, that's the opposite. When we want to be taking profit into that or just avoiding them, because this pull in is often what's going to be what follows, not this move breaking out of this channel and going to 120 very quickly, or for CF's example, going to say 90. It's like, that's probably not going to happen. Maybe it goes a few more dollars.
Yeah. Just
kind of did here, and it loses some momentum and it kind of pulls back in, and then, it repeats this pattern over and over again.
Next one, we got Team 330. I like this setup a lot.
Yeah, this reminds me very similar like the PAYC, even like Dash, very similar. Again, just beating up names that eventually have to start to base, which it seems like, the team as well is starting to do that, where you want to buy up to 330. For now, you have to kind of give it first 300. So you're kind of giving
it a while. Go lie.
Fix your truck. So you're going to give it 10%. So definitely want to keep on the radar. But if you can find a tighter entry or like a momentum buy through 330, and you don't have to really give it versus 300, then definitely consider, because this could be one where you can buy through 330 and realistically, get a move back in that 400 area. It's hard to say we're going to hold it back to those highs. This is a pretty big range, and this could take 6 months to a year to kind of get back there. Short term, up to 330 to probably 400 is probably a realistic move that you can expect if it's going to break this 330 with some power.
Yeah, I have some in the long term, so this is a nice spot to just add some here, I think. Next one we got from Alex. He's looking at ARLP through the doji at lows through 14.
Hard pass.
Yeah.
just because one, it's a super cheap name. So anyone, you start to look at this name, everyone going back to probably before even some of the people on here have probably even been trading. Anyone in this name for the last 20 years is losing money. So everyone in here for the last decade just cannot wait to get out of this name. And you just have extreme overhead resistance at pretty much every price point this name is going to reach. Anyone's going to want to be selling any new high in this name. So there's just so much ahead of you, like that's not going to be in your favor, that it's going to be way easier to just do. I would, the Bkng, like the most expensive name, I would all day long rather buy this through 2,500 than buy this ARLP through 13, where your realistic risk here, you have more risk buying this $13 stock than you would have buying that $2,500 stock. A $1 drop here, you're going to lose, almost 10%, a little less than 10%, but that's a realistic, this thing moves a couple cents in a day. That's 10%, where you're not going to lose. Bkng is not going to drop $250 in one day, where this name could easily do it with just random trading. And that, I think, for a lot of people in the beginning, even myself included, was a very hard concept to grasp, that these cheaper names are often far more risky than the more expensive ones, because the initial thought is I can buy it at 13 and sell it at 100, but that's really never going to happen. Where the name that Bkng at 2,500 realistically could go to 5,000 in a year or two, where this is never going to see 50 until 2030 scenario.
Next one we got ATO through 107 after earnings, which are tomorrow. So much better setup on Alex's part. Redemption.
Yeah. This is again a huge base that's been forming. Almost have to kind of put like the weekly to really show how long this base has been forming. So this looks amazing. Definitely that earnings could be that catalyst, especially that it's been kind of flagging into this, where again everyone's going to wait for what their earnings are going to be. Again, it's a gas distributor, it's a utilities name. So again, shouldn't really expect kind of fireworks for this thing if they're just kind of distributing the gas and they're not pulling out of the ground. It's kind of like a fixed service business, so it shouldn't be that volatile of their earnings, but through 108, definitely looks really good for sure.
Yeah. And if you look back, you can kind of see where that all-time high was, around 115, 116. So that would kind of be the target area, of what I would look for.
Yeah.
Next one, we got AVB 253.
Well, let's go to the next one. Not really seeing much here.
Yeah, I mean, it's tightening up. It had a strong earnings day, and now it's just kind of consolidating. So if it could kind of go sideways here for a few more days, it could be a nice little earnings flag at highs. AWK, looking to short it through 94.
Yeah, I would be kind of thinking the opposite. It's coming in a major support. This has been major support. And we've started to see with a lot of names that as they're coming into these major areas of support, they're kind of getting held up. They're not really blowing through these lows anymore. Even just the broad market itself, we're not seeing we're breaking out through 420, we're rolling over into a bear market. We're just seeing that, okay, now we're in this new range bound market. And that seems to kind of be the overall theme. So I think the shorting, especially how far this is already kind of came, if you want to short here, okay, I get it. If you want to even short here, okay, I get it. Third time, okay, cool, kind of get it. But as it starts getting more and more and more obvious, usually it's the opposite. And even on the flip, when we start to see, we see a stock base, we see it break out. And as the name gets more and more extended, those flags get tighter and tighter. And the more obvious that flag becomes, as extended it gets, usually the less upside they have. And same thing here. Will it push down through, that 152 area? More than likely, but it's just not really.
Yeah. And I mean, if you zoom out and look at the weekly chart, again, this is in an ascending channel. So this is the type of stock that I'm looking to buy off of support. If you really, really zoom out, you can see that. So the opposite of that other one that we talked about earlier, where someone was trying to buy through highs. Okay. Next one, Box, which you mentioned. So we'll skip that one. Let's go to Kerteman. He's got TMO 603.
TMO.
Kind of similar to that, what was that, AVB, where just recently had earnings and now kind of consolidating. But if it could flag out here for a little bit, maybe like this week, we can look to buy through that 610 area versus 590 or 589, whatever that is.
Yeah. And this, if this can kind of pull in, and like we can see this 200-day recently has been acting as support. So if we can kind of pull in, we can still see that, comes in at 560, and then it can kind of turn back up to that area. And when I say that pull, like it comes in, disregard the red, just, and, kind of bases out, and then kind of gets back here. And this is where, maybe this takes a few weeks or even a month, but that's when, like, we want to see that move where when we start to, if you're charting it, even for ourselves, we want it to go, to tomorrow or today. Like we want this kind of move, and that's probably not going to happen. But if you give it the time to kind of pull in, base out, and then get back to this area, it probably will have that move back to these 660 area, which would be a 10% trade.
Yeah, I would say if it did, like you said, if it did break out, let's say today, it would have a lot of trouble getting through that 630 area versus if it consolidated more, relaxed, took a breather, then it could really find the strength to push back to all-time highs. So that's where, we want to be patient and wait for those real setups. Next one, he's got his ABT 131.
ABT. So definitely, so it looks like he's looking at folks on the healthcare space. He's looking at, but the same thing. It's like it just, it's gone. This is fifth day up, and this is the harder stuff where it's harder to get into the position. Like I definitely see the level you're looking at, but it's hard this day. We want to see, if we're talking about the broad market, you don't want to be buying this day when everything looks amazing. We're fourth day up. That's when you start to get that pull in. And that's what I feel like you're going to kind of see with this ABT. Maybe it pushes up one more day, but then you're going to see that little pull in and that little bit of a fade when everyone now has already got into it off that, fifth or sixth day up. So this is seem like that TMO, pulls in, can start to base out, the 200-day continues to act as support. And then eventually you get that move, in a few weeks or a month, and you can realistically get that move back to, retest that, prior high of this 140 area.
Alex had a couple more. He said BYD, just on the in time list, monthly looks really, really good. So one that he wants to keep an eye on, I'm assuming through that 68 area in time.
Yeah, I mean, I was looking at that Win, which is another casino name, and this chart looks way better than Win. This is, Win is facing basically near its, 52-week lows, where this, what was it, BYD?
Yeah, BYD.
BYD is basically flagging at all-time highs. So if you're looking at Win, take it off your list, because this looks way better. This almost looks like very similar to MS. This is flagging at all-time highs. It's been flagging it for many, many months.
Yeah.
Through this 68 looks amazing. So yeah, this looks great.
Yeah, then we got one more. We got CB. He wants some more sideways, but earnings flag setting up. Yeah, just ascending channel again.
Yeah, you just need, definitely just need some time. But looking in the right spots again, you're definitely going to get bailed out much more likely. Even if you were blindly buying 210, as much as it's just a random entry here, just buying the new high. This compared to say like that cold name that's $15, I would rather be in this where you're not going to, even losing 10% in here, it's going to take some time to lose 10%. Where in that cold, for example, that could be by tomorrow just because of a random guy selling, a couple hundred shares.
Yeah, we got BLL from Carl looking for, I guess, a support buy at this pivot here, 95 versus 90.
95.
Yeah, basically through Friday's high, but with a stop under earnings day low.
Okay. I mean, so if that's a trade, I would definitely because this up through this 98 looks also, really good. So if that's like the entries up through 95, I definitely see that. And even, if it were me, I'd buy 95 kind of versus 92 and just keep that as a little feeler. And then with kind of the mindset of like, I want to buy through that 98 and be looking to kick, a little bit in that 103 and see, it can get that next higher. But definitely see. Obviously, you're looking at Carl. And on a side note, might be going snowmobiling in 2 weeks. So I'll let you know, Carl. Bring all your sleds up.
Yeah. I feel like this
I'm snowmobiling every day. I'm on a streak.
I feel like this BLL, if you had it, if it were to come down to those earnings day lows, there's a high probability it's going to shake out that level. So having your stop right under those earning day lows, you're probably going to get shaken out. So you might as well have a tighter stop on that starter position. That way you can sell it quickly, take the quick loss, watch for that shakeout of those earnings day lows, and then buy it again where you'll actually get a better price and a lower risk. So that's what I would do.
I agree, Heaven. I actually set 90 alerts just
there
so
you go.
I off of a support buy. But the 5-to-1 to me, the 5-to-1 is saying, give it $5 risk and try to be in the move if it can clear 100.
Well, I mean, you don't necessarily have to risk $5 for the 5-to-1, right? Because if you're buying 95 with the stop under 92, you're risking 3. Your 5-to-1 is $15 higher, so you're looking at 110. So but I like the setup. Definitely want to see how this one reacts to that 50 MA as well as those earnings day lows this week.
Kind of like the little bit of a cup and handle formation too. With, this flags out, this kind of giving a little bit of a cheat level around this 95. It could be a more defined setup in just a couple days.
I hear you.
All right, guys, looks like the market's opening in about 2 minutes. So anyone have any last ideas before we call it a morning?
Did anyone talk about Google?
Yeah, I mentioned Google.
Okay.
It's like earnings gap fill. Don't worry, bro. I got you. I'm watching.
Yeah, I know Shake's all over it too. I'm in it, but it looks good really good.
Yep.
All right, guys. Well, good luck on the open today. Any ideas, make sure to call them out in the chat. And we'll see you next week.
Thanks, Bennett.
See you, Carl. See everybody else.